Another subtopic under this topic is what is from business activities to what to financial statements. Corporate managers acquire physical and financial resources to create value for the firm's investors through business activities. Yes or yes? Yes. Okay. Yes, because the major purpose of establishing a company is to create value for the owners. Okay, create value for the owners, and there's no how you create value for the owner without considering other stakeholders involved, related stakeholders. Okay, so corporate managers acquire what? They acquire physical and financial resources. Financial resources, they need capital. Financial resources, they need money to run the business activities day to day. Okay, the physical resources such as the materials they use, like a manufacturing company as the case. Okay, and also they need human resources. Okay, to use all these all other resources are we together to help them make good use of all other resources. They channel everything together. They input data where necessary and the likes, such to have a better output. Okay, and also financial statements measure and summarize the economic consequences of business activities. Financial statements measures and summarizes the economic consequences of business activities. All is economic interactions with all stakeholders involved. Are we together? So this can be demonstrated grammatically as demonstrated. Okay, so we have financial statements. Okay, financial statements. We have business application. We have business application contents. We have business application context. Okay, sorry. We have a business application context. Okay, under financial statements. Okay, we have manager's superior information. Okay, we have manager's superior information on what? Manager's superior information on business activities. Manager's superior information on business activities. Okay, so also we have what? We have distortion from what? From managers. Distortion from managers accounting choices. Okay, from manager accounting choices. We have other what? We have industry and firm data. Industry and firm what? And firm data, etc. Okay, so also we have what? Under business application contents, we have credit analysis. Okay, we have securities analysis. We have general business analysis. Also, we have our debt, dividend analysis. Okay, etc. Okay, so all these are what they are in connection with what? With the analysis tools. Okay, they are all in connection with what? With analysis tools. And under these we have what? We have business strategy analysis. Business strategy analysis. Okay, we have business strategy analysis, under which there is a general performance. general performance. You assess general performance expectations through what? Through industry analysis and competitive what? Through industry analysis and competitive what? And competitive strategy analysis. Are we together? And this as well links to what? It links to prospective analysis. Okay, so under prospective analysis, you make a forecast. Okay, make forecast and what? And value business. Make forecast and value what? And value business. And it also links to what? Financial analysis. Okay, it links to financial analysis where you evaluate performance. Okay, you evaluate performance using what? Evaluate performance using ratios. Evaluate performance using ratios and what? Using ratios and cash flow analysis. Using ratio and cash flow analysis. Okay, you evaluate performance using what? Ratio and cash flow analysis. And it's also linked to what? Accounting analysis. Okay, accounting analysis. So where you evaluate accounting quality by what? By assessing what? By assessing accounting policy, assessing accounting policies and what? And estimates. Okay, evaluate accounting quality by assessing accounting policies and what? And estimates. Are we together? Okay, so that was what business from business activities to what? From business activities to financial statements. Okay, so you can see all what you need to go through. So because corporate manager has acquired physical and financial resources to create value for the firm's investors through their business activity. So you need to analyze your business strategy. Okay, you need to analyze your business strategy so that you know if things are going to in what if things are conforming as planned. Okay, if they are conforming to plan. Okay, to know if your activities carried out are in conformance with the set objectives. Okay, so financial statements will measure and summarize the economic consequences. So you have to evaluate your accounting quality by assessing your accounting policies and estimates, and evaluate performance using ratios and cash flow analysis through financial analysis. Are we together? So financial statements are a window on the activities of the firm. Okay, they are a window on the activities of the firm. So such as economic environment, business strategies, accounting good sorry in accounting, you should have a good accounting system that facilitates quality information. And also the role of acquire accounting. Okay, that transactions to be recorded as at the time they took place, or as at the time the transactions are taken. Okay, so also accounting standards or generally accepted accounting principles. Okay, should also be used in preparing the financial statement, as well as the international financial reporting standards. Okay, then you should audit the financial informations, and also managers reporting strategy. So financial statement are what they are, a window on all these activities: managers reporting strategy, auditing of financial information, accounting standards, the role of accounting, business strategies, and what an economic environment. So now let's take Accra accounting. Okay, so now for Accra accounting, there is need for Accra that arises from what investors demand for financial report on a periodic basis. Need for Accra accounting arises from investors demand for financial reports on a periodic basis. Okay, so you should record your transactions at the time they occur. Okay, so the corporate financial reports prepared using Accra rather than cash accounting. Okay, so instead of recording transactions as at the time cash are received, okay, you say no, record your transactions as at the time they occur. Okay, so also Accra accounting distinguishes between the recording of costs and benefits associated with economic activities. Recording of costs and benefits associated with economic activities. Also, there is an effect of economic transactions on recorded, okay, or on record expected and not actual cash received and payments. Okay, so also the first using Accra basis, there's a it has effect on economic transactions which are recorded on the basis of expected and not on actual cash receipts and payments. Okay, so now when we are talking about accounting standards, okay, what are the benefits of using accounting standards to investors? Okay, so Accra accounting is subjective and relies on variety of assumptions. So managers have incentives to use accounting discretion to distort reported profits. Okay, so this may be an area of concern for the potential investors or an existing investors. Also, accounting standards are developed to improve the quality of financial reporting. Okay, so accounting standards have been developed to improve the quality of financial reporting. So this will assure, okay, this will assure the investor that they are not wasting their money. Their money are secured. Okay, and also accounting standards ensure that managers are not able to use their accounting flexibility to disguise reality for self-serving purposes. Managers reporting strategy. Are we together? Managers reporting strategy. So because some managers decide to manipulate financials, okay. So but there are rules, there are principles in place that stop them from doing that. Okay. So it ensures that managers are not able to use their accounting flexibility to disguise reality for self-serving purposes. Okay. So also, it is not optimal to use accounting regulation to eliminate managerial flexibility completely. Okay, so that's why accounting standards uh, is a principle based on like gap. Okay, which is rule based. Are we together? So it is a principle it is a principle based. Okay, sorry, it is unlike UK gap, okay, which is a rule based. Are we together? Which is rule based. So international financial reporting standards they are principle based, and then they allow for professional judgment. Okay, so also accounting systems leave considerable room for managers to influence financial statements data. Okay, and also uh corporate managers can choose accounting and disclosure policies to hide the true economic picture of their business and manipulate investors perceptions. Mind you, there are regulations there are regulations in place, in control, both by the standard organizational body and the professional body. Okay, So, and also there are rules and guidelines in place set by the security exchange commission to curb such acts from what arising from what from managers acts. Okay, so superior disclosure strategy will enable managers to communicate the underlying business reality to to outside investors. Okay, so that's why it is required that there should be disclosures adequate disclosures. So now in auditing, how does audit contribute to what to or how does it benefit investors? Okay, what consideration is in or do will what will investors consider as regards auditing? Okay, so because auditing is a verification of the integrity of the reported financial statement by someone independent of the preparer. So it's what it keeps a potential investor or the investors rest assured that their money are in a safe custody. Okay, so and also auditor ensures that managers use accounting rules and conventions consistently over time. And also auditing improves the quality of accounting data. Threats of lawsuits and resulting penalties has the beneficial effect of improving the accuracy of financial information and disclosure. Okay, so because auditing knows the results of what or the consequence of an inappropriate conclusion or opinion or judgment on financial statement that doesn't reveal a true and fair view. Okay, that doesn't state the true picture of a company. So there is what there is a or there are controls or there are procedures in place. Okay, that makes the auditor that makes them sit tight. Okay, that makes them sit tight while performing their duty. Okay, they ensure that they reduce their liability to a barest minimum, if not all. Are we together? Okay, so we are going on break for now. When we come back, we continue from where we stop. Okay. I wish you a lovely break. Goodbye.